Welcome to the Sushi Swap Onsen AMA, where we bring on projects that have partnered through the Onsen program and give them a platform to reach a larger audience. I am joined here today with Bruno, Cody, and Internet Paul, Craig, Carson, and Sam, all from Tokemak. Thank you all for joining us. How are you today?
Doing great. Thanks for having us, Tangle.
Thanks for having us.
Thank you.
Excellent.
This is a super full house here. We've never had 8 participants plus myself. So on my screen, the way I've got it set up here, there is 3 layers, 3 levels of users up in the stage here. So it's pretty cool. Pretty cool to see this much participation from a team. So awesome, you guys. I'll just start off here with a few questions for you guys and kind of introduce you and the project, and we can open this up to the audience for questions. And you can just raise your hand at the bottom. There's a little hand button. Click on that. It'll give you an invite, and we can get you up on stage to ask some questions. And we'll get you into that in 10, 15 minutes or so. We'll open it up here after we kind of just get a little intro and get things rolling. Then we've also got the AMA text questions channel, which I see several of you have already been messaging and into. And if you can, just please refrain that to just be questions related to the AMA. I know you're all super excited about all this, so let's try and keep that relevant so we don't lose any of the questions, because it can sometimes be a bit of a jungle out there. So anyways, if you guys want, let's if you don't mind just giving a quick little intro to each other and a bit of background and current involvement with Tokemak.
I'll kick things off, and I'll keep mine brief just because I'll probably be speaking for quite a bit of this discussion. So I'm Carson, or Liquidity Wizard, my different handles. I'm founder of Tokemak. Background's originally physics, did a PhD in physics, master's in electrical engineering, did computational and theoretical plasma physics, which sort of connects into some of our naming, which I think we'll get to shortly. And really sort of grew up in the market making side of the world within crypto, and saw that there was a huge opportunity to really evolve the industry and do one of the few last things I think that we're not doing in a DeFi native manner, in a much better and more equal method for all participants.
Awesome, thank you. Whoever wants to go next.
Yeah, my name's Bruno. I've been with Tokemak since last year. Been around the tech industry for about 5 years now. From a bit of a different background, but joined last year, and doing mostly I'm on the tokenomics side.
This is Craig. I joined Fractal. We were still Fractal as head of growth, and working with projects to help establish liquidity based on their goals at the time. And as we've transitioned into Tokemak, led a lot of the products here.
Hey, this is Paul. I do a lot of the cultural elements, branding and design, background in design and sales, and joined Tokemak over a year ago now, and have been here for the full ride.
I'll go next. I'm End. I'm the resident TGen on the Tokemak team. I was someone that performed slightly above average during DeFi summer, and was friends with some of the Tokemak team, so they brought me on to do some of the comm stuff, write the Medium articles, and manage the Discord, and help Paul with some creative endeavors.
Hi, we're all DGens here. You're just more degenerate than us, End. Sorry, Cody, go ahead.
No, I'm learning from Connor. Cody here, on the development side, a little bit of front end, back end, and smart contracts. Been in development for many years, a little bit of enterprise SaaS, some consulting, but been with the Tokemak team for, I think, 5 months now.
All right.
And I'm sorry.
Yeah, go ahead, Sam.
I'm Sam. I'm also on the Tokemak development team. Joined earlier this year, and I've been kind of in the tech space and financial services for the last 10 plus years.
And I'm Jake. I am smart contracts backend. Been with the Tokemak team for 4 or 5 months at this point.
Awesome. Thank you guys so much for your quick intro there, and yeah. So let's kind of dive into Tokemak a bit here. What's the inspiration for the name Tokemak? Where's that come from?
I'll kick off, and then I want to throw it over to Paul on this topic, because this was ultimately the brainchild of him, was the naming of this and really the branding. But the background came from, as I mentioned before, I was in plasma physics, doing what's called magnetohydrodynamics, which is actually a word. It's basically magnetic fields coupled into fluid dynamics, doing computation and theory for instabilities that can develop in what's called tokamaks, Tokamak. And these are essentially fusion energy devices or reactors that have always been sort of this holy grail that energy production has been trying to push towards. Now, it's continuously gotten kind of pushed back, but it was always this like, hey, if we could unlock this, there'd be so much that humanity could do. So the analogy here, the high-level analogy, and then I'll let Paul dig in a little more, is really that this is Tokemak, misspelled with an E for the token reactor, is really a liquidity engine for DeFi, really liquidity reactors that can touch and enable really everything in DeFi and Web3. Paul, anything to jump in on that?
Yeah, I think, I mean, the initial genesis of the idea, the first time I met Carson, we didn't know each other. It was during the bear market. And back in those days, if anybody in your network knew 2 people who were into crypto, it was so sort of niche, they would, say, hey, you guys should meet each other. And so we both came into the meeting with, limited expectations. And we ended up talking about tokamaks. And Carson was one of maybe 2 or 3 people I'd ever met that even knew what one of those was. When I found out that he had been working on them for the Department of Energy, I was like, okay, I'll work for this guy. And as we thought about it more, we went through several sort of concepts of the brand and sort of the, it's a bit of movie magic. It doesn't 100% line up, but there's enough there that I do feel like it helps people understand what exactly it is we're doing. So the sort of collision of tokens creating liquidity is analogous to the collision of atoms creating energy. We also look at liquidity as sort of the energy of markets. So don't read too far into it, or you might end up in a dead end. But on the surface level, it's there, and I do think it's useful.
Cool.
One other thing I'll pepper in on that is Paul and myself both talked that like fusion energy and energy production is sort of this thing that can be hard to wrap your head around unless you sort of use concepts. And very similarly, in fact, I would argue even more challenging is understanding what liquidity and market making actually is. Those are very nebulous concepts to most people, and people within crypto and DeFi have sort of had to wrap their heads around those. But we think as this gets to a broader audience, it's much better to abstract those things away to something that is sort of a good analog, like the token reactor or Tokemak.
Cool. Sounds like super big brain stuff. So that's awesome. And let's move this big brain stuff into like a full overview of Tokemak.
Well, I'll jump into it here. So effectively what Tokemak is a liquidity utility. So the observation here is that in Web3, in this new Web3 world, value flow is replacing data flow. So now you have tokens of value moving around instead of just data. And so the kind of parallel to bandwidth in the old internet world is actually liquidity here. And the goal with Tokemak is to usher in the broadband moment of liquidity for DeFi. And if you actually think through implications of this really comes to actually an infrastructure level. So all of these different applications, DeFi projects, Web3, getting into gaming, NFT, et cetera, all of them have decided to, for good reason, to separate their user from their product by a token. And that, of course, introduces new frictions because now users have to buy or sell, get into and out of tokens in order to interact with these protocols. And what we believe, myself and the team believe, is going forward, the protocol-to-protocol, DAO-to-DAO interactions are only going to increase significantly further. And that means that, again, this role of liquidity is basically the bandwidth of the system. You want to be able to, in as near a lossless fashion as possible, translate one token into another token via this liquidity. And so that's really what we're trying to solve first and foremost. And we believe that this is going to unlock huge amounts of value as it plugs into other DeFi protocols and Web3 applications to come.
All right. Okay. So liquidity being the name of the game here. And so a couple things, I guess, to start off on here is like one of the recent things you guys had here was the Genesis. Do you want to kind of discuss that and kind of how that works and how that kind of kicked things off?
Yeah, and I think just because the Genesis is probably going to tie back to a few of these things, it might be worth me going a little more of an overview from kind of that vision of where this is going to sort of the more tangible features or aspects or participants of this different ecosystem. So
sure
a couple
thing.
of things you should know before I kind of come back to the Genesis is the way this system works. It's really like decentralizing a market maker. We were looking at our past market making experiences in the space. And we asked ourselves the question, what happens if you pull apart a trading firm or a market maker into its constituent pieces and decentralize that across the blockchain? So if you think about a market making firm, it's basically centralizing capital, it's centralizing trading or strategic expertise on what should be traded, which markets and where, and then the trading technology and expertise in order to actually make markets and put bids and offers into the market. With Tokemak, we're basically decentralizing all of those pieces. So the capital flows in via liquidity providers. That's probably the least surprising piece of this architecture. The strategic direction comes from what we call liquidity directors, or you'll see us call these LDs. And these are basically TOKE stakeholders that stake into our system and then vote to see which asset they want to see liquidity on and which venue. So, for example, you might stake your TOKE and direct SNX liquidity paired with ETH into SushiSwap as an example, or any of the other tokens of which we have reactors. So you might hear me talk about like an SNX reactor or an Ohm reactor or an RGT reactor or Alchemix reactor. That just means a different one of these reactors where liquidity providers put the asset in and liquidity directors direct the TVL in that reactor out to the end venues or exchanges. And at launch, those recipients of the liquidity will be SushiSwap, Uniswap, Balancer, and 0x. And then we will be expanding to more venues in the future. The last participant that I won't go into a ton of detail on this, probably maybe until later on this call, if we get there, is the pricer, which is in the case of an exchange that is either an RFQ or order book model, you need someone to set the bids and offers, and that's where the pricer comes in. And we'll be decentralizing that as well. The only one that's relevant for at launch is 0x, and SushiSwap, Uniswap, and Balancer are all AMMs that are on the curve. So I wanted to sort of preface with that because that gives you kind of enough context so that if on the Genesis we start talking about different pieces of this, you have some of the context. So digging into the Genesis, we had just completed this, everything's a blur, I guess a week and a half ago. We effectively looked around at different ways to get tokens out, for example, CoinList or sort of the Balancer emissions, sort of ways to first get tokens out into the hands of users across DeFi, and I didn't really necessarily love anything that was available. I was trying to find something where everyone in the round, there could be price discovery collectively, but everyone in the round would be treated the same. So I didn't want like a bot that came in the first second to get a much better price than an actual user and believer in the project who comes in hour 1 or even day 6 or something like that. So much to the chagrin probably of the devs that are on this call, we decided to just build basically a launch ourselves. So we built the contracts. By the way, we're happy to share the contracts, the audits, the GitHub with any projects interested in using this for launch. But we essentially built this event that was a week long where people put ETH and USDC in. There was price discovery between $2 and $8. Once it hit $8, we didn't actually stop deposits, but we basically diluted all of the participants down in the amount they could invest, and instead opened up what we call whitelist or private farming. So the event overflowed the cap. It opened up private farming. And so if you go to tokemak.xyz right now, we're in the phase right now after the Genesis, where people claimed their TOKE that they acquired in this Genesis, staked this in. They're now, you can earn with TOKE or Sushi LP or Uni LP on our site. And then those that participated in the Genesis are able to stake ETH and USDC right now. And starting in a week, that will actually be open to the public. The reason we sort of did this, not only to get a fair type of launch compared to some of the other options we were exploring, was also that we wanted to use this private farming to basically stage the TVL in ETH and USDC that eventually we will use when we start deploying liquidity out to the different venues. It's maybe worth kind of hammering in the point right now that even though we're mostly going to be talking about the different token projects and how this is powerful for DAOs later in this discussion, we source everything from single-sided pools. So to a liquidity provider, they basically come in, they don't have to worry about putting $1 million of bond and $1 million of ETH. They can just come in with just the bond they have, and then we source from a different pool of LPs and ETH, and our deployer contracts or manager basically is pulling equal amounts of those to then flow into, for example, SUSHI swap. So in doing sort of the way we ran the Degenesis, we're already starting to stage out the TVL we need for Ether, USDC, and other stables that we'll be adding in order to kind of pair up with the project tokens to deploy trading market liquidity across DeFi.
Awesome. Okay. Yeah, that's a really good overview on Degenesis as well here. So with each of these reactors, we've got like single-sided asset is like what people need to bring to it. So we don't really have the same kind of concept as like as the traditional LPing then as a 50-50 pool. Is that correct?
Yep, that's correct. So and our goal kind of with this was to make it as simple as possible, remove as much friction for liquidity providers. So probably a lot, depending on the types of listeners that we have in the audience. It's a relatively advanced. I think we take for granted sometimes how advanced a user needs to be, even to, for example, be an LP on SushiSwap or Uniswap, where you need to, one, there's friction, you have to have both assets. Two, you have to understand how to deploy those things in. I think it's a relatively streamlined process, but that still isn't very easy for someone off the street who just got into DeFi. It's not like kind of the 101 level. And then three, once you're in, you have to deal with that IL. And so our thesis was if you can remove as much of that friction as possible, then liquidity can flow much smoother and more freely across the space if we can get more liquidity providers flowing into this meta liquidity layer that Tokemak offers, and then our collective brain basically, or network think of the TOKE holders who get to direct where that liquidity goes. That's basically what deals with the complexity of where it should go, and our system itself pulls the the other side to deploy it in. So it manages all that complexity automatically.
Okay. And so you guys got you'll have liquidity directors versus liquidity providers then. Is that kind of?
Yep, that's exactly right. So each project, so if you're talking about, for example, the ALCX reactor, you would have basically a reactor. If you see our logo, or if you go to tokemak.xyz, you'll see this kind of two-sided chamber. A Tokemak is actually a donut-shaped device, so it's a cross-section of the reactor, and the game is to balance the reactor. So this will be once this actually starts deploying the liquidity. So the left side will be taking in the native asset, in this case ALCX. We're talking about the Alchemix reactor, and the right side is taking in TOKE. So these are holders that decide to stake there. They of course earn rewards. Both sides earn rewards actually in TOKE for both the liquidity providers and liquidity directors. And those liquidity directors that stake in get the benefit of then voting where that liquidity goes. And this is, I often call this like governance on steroids, because as opposed to having an improvement proposal that is put out and it's just a binary yes, no from members of the community, this is, you are actually intricately linked into the operation of this thing each cycle. So your vote always matters, and you also don't need permission from larger holders. There's no threshold. Even if you held one TOKE, you're getting to direct basically where one TOKE divided by the number of TOKE that are staked to that reactor goes. So everyone gets their weighted shake, and you're directing your share of that TVL down into the exchanges based on where you would like to see liquidity. And of course, the community at the large knows this. Obviously, the DAOs also are very interested in this, because this can sort of be a much more direct route for them solving their DeFi liquidity than going to a market maker or budgeting a large amount of inflation for LP. They can instead stand up one of these reactors, and then if they hold sufficient TOKE, they can vote that to wherever they know that other protocols or users are trading or interacting with their token, so that it's sort of most efficiently used.
Very cool. Yeah, that's been a really good overview on kind of how this all works so far. And let's maybe open this up here to the audience. I see Cryptos Dallas has had their hand up for a while. Let's bring you up here on stage and see what you've got for us. And anybody else, if you're looking to ask questions, please raise your hand and we'll get you up here to speak here. Zorb, go on ahead, and then we'll bring up the next people here as we go along. So just one at a time. Keep your hand up. Hello, Zorb.
First of all, my extreme gratitude to Liquidity Wizard for creating what seems to be a breakthrough moment in DeFi. Congratulations, my friend. You have piqued my interest, definitely. And I come from the Olympus family. I'm an OMI. So I saw your post on Twitter. One Ohm as a unit of value, and one toke as a unit of liquidity. Can you please elaborate on how this new ecosystem is emerging and the interoperability or the connection between Ohm as a currency of value and toke as a currency of liquidity? Thank you.
Yeah, absolutely. Great question, and love to talk to the OMIs. Very impressed with everything Olympus is doing, and I think these are two communities that share sort of this protocol owned and controlled future vision. So yeah, what I was meaning by that, I think there's a ton of synergies with Olympus and other protocols like that are essentially bringing in assets effectively. So in the case of Ohm, really trying to be this reserve that is backed by valuable assets, where Ohm can be sort of this yardstick or measuring stick of value. And equivalently, with TOKE, what we're trying to do is this really is a utility for liquidity. So it makes money for all TOKE holders, but that's actually a side effect. First and foremost, it's trying to solve this liquidity as bandwidth in the ecosystem problem. And so due to that, if you think about what happens over time, and we might get to this a little later, we have this moment we call the singularity, which is where this thing has absorbed enough assets from the spread, from trading fees, from, in the case of like Sushi Swap, from earning Sushi rewards. And we actually are paying out rewards to liquidity providers and liquidity directors via TOKE. So decentralizing the network and then making the protocol more powerful by controlling or self-containing those protocol-controlled assets of which all the TOKE holders have a claim on. So in a very kind of analogous way, but with a different purpose than what Olympus is doing, both of these are trying to grow, but you're trying to basically, or should say Olympus is trying to sort of be this value backstop, and we're trying to be this ultimate liquidity utility that eventually doesn't even need third-party liquidity providers. Now, if you can imagine interlinking different protocols together, you can actually get to that end state even further. So if we plug in with a large value or reserve holder like Olympus, you can actually get to that moment of singularity where you might not need to incentivize third-party liquidity providers even faster. So I kind of think of these as the liquidity black hole and the value black hole, which are sucking things in, and sort of over time you might even have really interesting interstellar dynamics going on, where you have a couple different protocols on a collision course where they can actually self-reinforce each other, where the reserve can be used to provide liquidity and the other one is a conduit of the other, and really there's actually a full cycle you can link between those. So a lot more I could go into that, but that kind of hopefully gives you the high level flavor.
Yes, so thank you very much for your answer. I think I need a few days to dwell on your full answer. I might hit you in DM later for some follow-ups if you don't mind. Thank you.
Yeah, that's perfect. I can go into more detail on it later, and some of it'll make more sense, by the way, when you see some of our mechanics, which are coming out over kind of this week and next, and then it'll probably become a little more tangible. But yeah, happy to discuss in DMs.
Awesome. I'm super excited about the project. I went in, I allocated a bit of my portfolio for TOKE. I provided some liquidity for the liquidity pool, and yeah, I'm very optimistic. This is very special. This really stands out in the scenery, and yeah, I'm all ears. So let's go.
Thank you very much. Appreciate it. And we're just getting started. So a lot more to come.
Thank you very much, Zorb. Huevos.
Howdy.
Hey.
Hey, I've got a two-part question around liquidity directors, and this is the part of Tokemak that hasn't quite clicked for me yet. So the first part is, let's say you own $1 million worth of TOKE, how much liquidity will you be able to direct with your TOKE position? And the second part of my question is, where do we expect most of the organic demand for TOKE to come from? So in terms of liquidity directors, you mentioned DAOs and maybe startups that have a token, but I'm curious, which liquidity director do you expect to be driving the most organic demand for the token? Like, how is TOKE going to accrue value organically from people who really need it in order to, make being paid in TOKE more attractive for everybody, the LPs and everybody?
Yep, great questions, and I'm especially on the second one. I'm glad you asked it. Do you want to jump in on the? Go ahead, Bruno, if you want to start on the.
I could go in on the first one. So, just in general, as we mentioned earlier, we're trying to kind of abstract everything and make things for the user simple. So, if you look at a individual token reactor, right? It's going to be basically a game for people to just balance the reactor, right? So it would be easy to make the assumption that the balance would be reached if you have a 1-to-1 kind of value ratio between the TOKE staked and the assets that are provided by LPs. But in reality, this ratio is dictated by our guardrail mechanic, right? So we might go into this a little bit later because there's a lot of detail to that too. But currently, we're going to drive with a little bit more conservative ratios to be on the safe side. And so the optimal ratio would be actually, the reactor would be balanced at a 10-to-1 ratio. So you would basically be able to direct $10 of liquidity with $1 worth of token in kind of a perfect balance.
Yep. Yeah, and I'll just say a little more on that.
And this would also then be incentivized basically accordingly via the rewards.
Yep, and I'll just go a little further on that. So at launch, there's basically two sets of guardrails, and these are probably, you're going to get to read about these in detail here very shortly, but this probably gets a little deeper probably for this call, but there's basically one that has to do with what's in this sidelined reserve versus the liquidity providers' assets, the LP assets, and the other is the TOKE to LP ratio. And as Bruno said, that starts at 10-to-1. So the only guardrail restriction that we have there when we're running things conservatively at launch is 10-to-1. So there can be $10 of liquidity deployed for every $1 of TOKE staked. Eventually, that can be relaxed even further. And then it's always the interaction with this other guardrail, whether you're able to, not only whether the system is balanced, but then also whether the reserve is big enough basically to. Oh, Tangle, can you hear me?
Yep. Yeah, still can. Still have you.
Okay, perfect. Someone just told me that they lost me, but it sounds like it must be their audio. Okay, just let me jump in at any point, Tangle, if I cut out. So effectively it's a 10-to-1 ratio. There's this other guardrail that at times can make it so it might not be kind of the full amount, at least early on when we're running things with a more conservative approach before we are slowly taking the brakes off, but that kind of gives you an answer for your first question. For the second question, it's really interesting. I think before I tell you kind of what types of participants I think will want this and use this and need this the most, I want to hit on something you said there at the end, which was very important about how this sort of is more valuable over time. So at the very beginning, right, when we're gearing up here to start deploying liquidity, you can think of one TOKE as a unit of liquidity. So if you have this TOKE, no one else can tell you anything different. You and you alone are in that much sort of directing power of liquidity, and you can control based on your stockpile, whether it's one TOKE or 1,000,000 TOKE, how much liquidity you stake in, and you route asset ABC into venue X, right? Over time, because we're basically decentralizing and paying the APRs in the system in TOKE because we want more decentralized ownership. That means that the system is growing what we call this protocol controlled assets. And this is basically what has to grow to the point where eventually we have the singularity where the thing can run itself. What that means is that this thing is growing a DeFi trading weighted portfolio of assets that's actually backing every TOKE over time, which means it evolves from in the beginning where you can value sort of fundamentally one TOKE as sort of whatever the market deems that directing $10 worth of liquidity is worth to over time to both that, but then also being backed by this growing portfolio of DeFi and really Web3 assets, because of course these could be NFT or gaming related things. It doesn't just have to be DeFi projects that we're supporting liquidity of. So that's a very important thing, because over time then that means that this thing naturally accrues more value and sort of sucks that in and becomes sort of a more fundamentally valuable token. Coming back to having said that, now going to your question of what does that mean for who will be kind of the ultimate liquidity directors? We sort of built this initially first and foremost for DAOs. So this really came from us working with different token projects, seeing that founders were struggling with these concepts of market making and liquidity. And it really was, we saw this parallel to like the early to the 90s, I guess late 90s, when tech companies all were running massive server farms for IT. They had armies of IT professionals. And essentially they were, each one was doing this in their own silo, and there was massive redundancy just to build the product they wanted. They had to run servers and they had to employ IT professionals. Then AWS came along and said, hey, we've got this as a utility, basically in the cloud, just build on this, focus on your product. That's what we're trying to do here as well, where each of these groups right now have lived and died by their liquidity. Some have done very well in it. Others have had some solid products that just never solved the kind of liquidity, the liquidity code here, and never got that off the ground. And what we're trying to do with Tokemak really is have this liquidity utility where they can plug in there. So long-winded way of saying it's very powerful for DAOs. It's also very powerful for exchanges, and this might be less obvious at first glance. So DAOs, we think, will be basically granting someone as liquidity director, or delegating someone on their team as liquidity director who will use their stockpile of TOKE to then be able to direct where their ABC token liquidity goes sort of across DeFi. And they can, of course, correct. And this gets to the art and science. There is no right answer. Maybe they want everything on SushiSwap, or maybe they want to even split across 4 or 8 venues or whatever, just so that there's a fairly good slippage and experience ultimately for traders, users, protocols on each of these venues. However, for the exchanges on sort of the different axis, they will want to stockpile this to then vote to each of the reactors to direct it to themselves, right? So it makes sense for SushiSwap to have a stockpile of this, because they can go to each of the reactor, vote that liquidity to Sushi, because of course all of these exchanges proliferate based on liquidity. And the more liquidity means the tighter slippage, which means the more trade volume goes, which means the more fees. So this will be extremely powerful for DAOs and also for exchanges. We often kind of call this like the liquidity arms race internally, not meaning that it's something nefarious, but just that there should be all types of participants that want and need this. You can also think traders and VCs and market makers, all of these also that interact with the market. They're going to want to be able to both support the liquidity of projects that they've placed bets on, and then also be able to deepen liquidity in venues where they need to interact with the markets. So I know that's not like a real punchy answer, but this really affects basically all participants and really all users in DeFi. They can all sort of benefit from this ability.
Cool. Appreciate it. Makes sense.
Thanks, Huevos. We'll bring up, we've got a bunch of questions here. This is good. I'd like to see this lineup here. We'll bring up one more from the stage, and then we'll touch a couple in the AMA text questions. So Crypto Prowess, if you can, you're next on the list. Let's get you up here. Crypto Prowess. Oh, no, okay. Crypto Dollars, we're going to try you again. See if you can get up here. We tried you a minute ago. Don't know if that worked. Here you are, Crypto Dollars.
Thank you very much. Appreciate you guys hosting this, and the Tokemak team, thank you for creating this. DeFi thanks you, and the DeFi community. I'm just curious. So I've been following you for a while, Liquidity Wizard. You've done traditional market making with this fractal thing, and now you're kind of decentralized market making with Tokemak. What's next? Any other projects you guys are working on, or you personally are working on?
There we go. Had to unmute myself. Great question. So always seeing opportunities and working on things. So I think before I go to the direct answer, I think it's worth me saying that like where liquidity on Tokemak can be used, because it ties into your question here. So obviously, to start with, we're talking about two-sided liquidity that can be deployed sort of across AMMs and exchanges, RFQ order book models initially. This can also go into a few different other types. We could eventually direct liquidity into other things. For example, asset managers or vaults like Yearn or Rari. That could be something that in the future the TOKE community could vote on, that we expand liquidity support so that we can deploy into there instead of just sort of trading market liquidity. Another group would be lending protocols, so like Aave, Compound, Cream, places like that. That could be another place where we eventually expand to, in addition to at first just expanding to more AMMs and exchanges. We know we have missed some, and we're planning to expand that sort of closest to today. One last spot that it can flow liquidity to, and this is actually where I also have been working close with another team on a really exciting protocol that's going to be coming in the future too, is in the OTC lending and trading space. So I've been working with this other team also building an OTC peer-to-peer lending and clearing protocol called Membrane, and there'll be some details to be shared on that fairly soon, I think, over the next probably 2 months here. So more to come on that, and there's interesting ways that Tokemak can flow liquidity over to that. And that's something, by the way, that's very different than anything that exists out in DeFi. So this isn't like a competitor to like an Aave or a SUSHI swap. It's something very different in how the OTC lending and clearing works. And that's definitely something where Tokemak liquidity can flow there, and then vice versa. This thing can actually bootstrap more capital and flow it into DeFi in general, and then Tokemak as a corollary.
All right, sounds great. Thank you, and thanks again for building all this great stuff.
Yeah, of course. Appreciate it.
Thank you, Cryptos Dallas. I'll move you to the audience, and we'll just go through a couple of things here in the AMA text questions. Going back to kind of the beginning here, we had someone Block for Future asked, Tokemak had a longer history than 12 months. Any chance to discuss the history of real Tokemak? Maybe rather than diving into it too deeply, is there a good place to check on that, or do you have a short answer for that?
Yeah, absolutely. I can take you through kind of my quick path through DeFi and crypto, and then also maybe highlight on Fractal as well, which is a big kind of part of that. So I got into trading while I was doing my PhD in physics. Ended up joining McKinsey after I did my PhD. Spent a few years in the fintech, financial services, banking space, learning the things that work well there, the things that suck there, and I was monitoring very closely crypto and blockchain, and at that point it was really a precursor to DeFi. January 2018, left McKinsey to found Fractal. We started sort of in the market making on centralized space in centralized exchanges, and then quickly got the DeFi bug, starting with 0x in kind of the late 2018, early 2019 frame, and we were one of the biggest market makers on 0x, and that's really what planted. Were it not for Fractal, we never would have seen this opportunity to really disrupt the market making business in a way that it was much more DeFi centric, and where market makers can still plug in, because this isn't to put market makers necessarily out of business, but it is to make this operate in a much more pro DAO, pro founder, and pro community way. So as we were doing this, we were talking to different token projects, supporting them on Coinbase and various places for market making, and we were hearing the horror stories of what it could be like to try to think through liquidity, try to think through market making, and realizing that these people that were objectively changing the world, were their projects and their visions were living and dying based on if they got the market making and liquidity correct. Fast forward to 2020. So for a while we were in DeFi, and it was this niche area, more often called like DEX trading at that time. But fast forward to 2020, with when everything took off, kind of in the early spring, and then going into DeFi summer, and we found ourselves in this quickly expanding. Everything that I thought would take 3 years to happen happened in like 3 months, and so that caused us to say, okay, market making. We know that this is really a challenge to different token projects. What is the better model out there? Like, we've been on it. We were on the side where we saw what other groups were charging and what could be done, and we said, this just isn't the right way to basically do it. Instead, there has to be a way that more directly helps everyone. And so ultimately what we're doing with Tokemak is we're going to flip a large cost, effectively cost for different DAOs, founders, token projects, and flip that over into a revenue generator for them. So they'll be able to get liquidity and also kick off revenue, as opposed to having this sort of massive cost that they have to cost and headache that they have to deal with. So that was sort of when the genesis for this came, was sort of in the early 2020 timeframe. And as we were digging into that, we sort of took we flipped the mirror on ourselves and say, we believe in DeFi. what does it mean to actually decentralize market making in its entirety? And that was where Tokemak came from.
Cool. Thank you for the full explanation on that. Hopefully that answers the question from before. And yeah, I also saw that, what do we have here? This was, there will be no minor radiation exposure from this AMA. It will be radiation free.
Not from this one. If you come join us on the core team, there might be some.
Oof. Okay, and then we'll take one more here from the AMA channel, and then I want to get it back to the audience here. So I appreciate everyone with your hands up. Keep them up. We're going to get there. Let's see. What was I had the?
Hey Tangle, there was one that I think might be a good question.
Okay.
If you don't mind.
Go ahead.
It's by gravity.eth, and the question is, how decentralized and trustless will reactor creation be and become? Which I think a lot of people are curious about. And so we have our core event, which is the collateralization of reactors event that's coming up, that TOKE holders will be able to vote on a set of around 30 projects. But eventually we'll want to evolve into the DAO voting on these reactors getting stood up. So I think either Bruno or Carson could sort of pontificate on that, which I think might be helpful for people to understand.
Yeah, I can jump in first because I think this is a good opportunity to describe the core, which is coming quite soon, and we're going to have an announcement on that, I think, by end of week here. But that's going to be sort of the first opportunity to get to sort of experience this governance on steroids, or what you can actually do with your TOKE. And then I'll discuss a little bit about what the model looks like going forward. So at the upcoming core event, we're going to have around 30 projects which are eligible to get a token reactor. So when we actually turn on the liquidity and this thing starts doing what it was born to do, we will probably be launching with 5 reactors. And this just has to do with size of reserves. And there's a number of reasons that we landed on. Like, first, we'll start with 5 reactors, and then we quickly want to expand there, and we plan to expand quickly from there. In order to determine those 5, we didn't think it was fair for the core team or me or something to just say, here's the 5 assets that get their reactors and get the first liquidity from this new novel way of providing liquidity. Instead, we thought it's most fair to take this, open this up to a TOKE vote. So what's going to happen in the core event is you're going to see a UI that looks very much like the actual liquidity direction, liquidity providing UI that you'll be all using very soon here. But each reactor is sort of a hypothetical reactor, and you're going to use your TOKE that's staked in basically the pools that those of you that have already staked on tokemak.xyz are in. If you're staked, you get a vote. So like one vote per one TOKE, and during that week you can vote, and you're going to basically have this leaderboard ranked 1 through 30 of which reactors are getting the most votes by the Tokemak community, the Tokemaks. And so at the end of the week, whichever are in the top 5, those will basically be the DAOs that we then go around to and say, hey, we're ready to go. We just need to spin up your reserve and get your reactor on. So basically the Tokemak community of TOKE holders will be the ones determining the reactors and the token projects that get first liquidity. Now, going forward, that I think is for first step in this. I consider that a pretty good stab at us sort of decentralizing that process. However, where we want this to go is actually where, similar to SushiSwap or Uniswap, where you drop in a token hash and you can stand up a pool. We want that same process eventually to be able to occur for getting a liquidity reactor at this higher liquidity level. So in the not too distant future, we plan to let anyone drop a token hash in, add a certain amount of collateral, and boom, now you have a new reactor on. So that's where we're going eventually. This will be highly, highly decentralized.
Wicked. Thank you. Let's open this up here. Roberto, you're up next. Let's get you up here, Roberto. There he is.
Hey guys, had to press the accept button.
Nice.
Going back to the concept of liquidity directors, so when you think about who ideally you'd like to see come in, is this kind of thinking about the masses of DeFi as like really just individuals and maybe some whales coming in and doing their thing? Is there a risk that more concentrated pools of capital enter Tokemak? Let's say what we'd call some form of institutional coming in, and then they would have some large swing in capability to operate.
Yeah, it's a very good question, and I think it sort of gets to the pros and cons of decentralization, right? Where I think the most sort of egalitarian or decentralized manner that you can approach this is that the TOKE are the TOKE, and you vote them. Now, of course, that means that those that understand what this is can go in and try to hoard those. So then it gets into this battle of meaning they can go out on the markets and just buy up as much as they want. So I would say that's always, and probably this is the case for basically every single DAO and protocol that's out there. This is a little bit of the Achilles heel might be too strong of a word, but the downside of this approach, where it can become at certain points concentrated in those type of players. Now, the beauty with DeFi generally is that should mean that they also want what's best for the protocol because they're most exposed. But that said, I think what you'll always have is, I think, the small guys, the big guys, the DAOs, the founders, the builders, the exchanges. Again, this provides a pretty massive utility. And when you actually see this, I mean, this is the definition of a utility token when you see this thing in action. Most utility tokens in DeFi are either giving you a governance vote, often yay, nay on things, or are collateral on things. And there's a lot of notable exceptions where they're doing much more complex and interesting things than that. But this thing will do so much what TOKE is when you guys see this in action very shortly here. And so I think, having said all of that, what that means is, one, those that understand the utility should always want to come in, and I think you'll probably have waves of this where it goes from smaller hands to bigger hands, and probably vice versa as those kind of do this. This is just kind of the ebb and flow, I think, of the space. And then I think that there's always the option then to put to different votes or to do what's right for the protocol if this ever got into, as you were saying, big institutions where we thought that they didn't have decentralization in best interest. There's ways that we could vote or make changes, I think, to things in order to address those as they come up. So it's definitely an interesting one where I don't think there's a great answer to that, probably across DeFi, but that's sort of always one of these double-edged sword risks, probably, of the fact that you've decentralized and there's just tokens out on the market that any player, large or small, can go and acquire.
Great, thank you.
Yeah, good question.
Thanks, Roberto. All right, let's Sar.
Hey, can you guys hear me?
You bet, Sar. Thank you. Go ahead.
Yeah. So actually, my question is kind of a follow-up on Roberto's question. Basically, when you are a liquidity director, from what I read in your Medium posts, you use a linear voting mechanism to decide where that liquidity is directed to. And I want to ask a question: if you guys have already made some kind of some endgame model of your system and run some simulations and decided that that was the best voting mechanism, because I think that one of the good use cases of your protocol would be to bootstrap liquidity on new protocols. And with a linear voting mechanism, it seems like you would give too much power to the big guys and leave the newer projects having fewer tokens that would make it harder to direct liquidity for them.
Yep. Yeah, you're hitting on a very important point, and I'm glad you asked this question, or we might not have hit this. One of the important things that we were thinking, because this is as important, in fact, more important for new protocols, new venues, et cetera, that are popping up that have either need liquidity as sort of an exchange or different liquidity recipient, and equally as important, maybe more important, as new tokenized projects that have a new token, an ABC token that's just getting off the ground. Obviously, this has a big liquidity generator, and this has to do with how, as more liquidity directors stake, the rewards increase for the liquidity providers. But this thing can generate and direct liquidity, so there's huge value to the new entrants. So we've thought a lot about that, and you're bringing up a good point. This kind of ties in both the last questions. The way we do this to get something off the ground, and actually the way the initial projects coming out of the core event, which for the core event we're going to have not only sort of big, quote unquote, blue chips in DeFi but also some promising like newcomers, right, that have propped up in the last 3 to 12 months, call it, that don't have massive market caps, because we want to show that this is really for all of those and can help them just as much, if not significantly more, than the big guys. So the way we put them on effectively a level playing field here is by enabling at launch them to do a swap, either a DAO to DAO trade or loan from our DAO to their DAO, where they can get enough token to be a powerful liquidity director day one, the DAO, so this new DAO or project, as we were discussing, and then On the other end, we get the tokens, so they're ABC, that we need to put in a reserve, which sort of is the backstop to turning on a reactor and being able to ensure that the liquidity providers are already made whole. So in that way, you don't have to be a massive blue chip DeFi protocol in order to not only have a reactor and get liquidity, but also be a powerful liquidity director day one. And we have a large amount sitting in our reserves that are sidelined for that. So there's this really kind of powerful model, and we thought long and hard about exactly what you were asking to make sure that this could be used for new projects, because that's when they're in the biggest uphill climb in trying to solve this liquidity crisis, basically, that's across DeFi.
Yeah, thank you. That was actually a better answer than I was expecting. I will make sure to wait more. Thank you very much.
Appreciate it. No, great question.
Thank you very much, sir. We'll bring up one more, and then we'll go to the AMA text questions. There's a bunch of stuff coming in. So, old Greg, or Oi Greg, there he is. Go ahead.
Best name ever. I'm just going to cut you off ahead of time and say that.
Thank you for that. Another Bailey's drinker. So I wanted to kind of follow on with some of these liquidity director questions. Right now, between the Degenesis and the core event and the initial seed round investors, there's going to be something like 22 million TOKE kind of available for use by liquidity directors. And at $25 a TOKE, that's about $550 million of voting power. If you're trying to do 10-to-1 ratio, how are you looking at that at launch, kind of around launch? It seems like the vast majority of TOKE out there won't really be able to be efficiently used to direct liquidity unless you're expecting to launch with $5 billion of reactor capital.
Yeah, very good question. So there's effectively two guardrails. So this gets back to that second one I was talking about. So right at launch, so even though I was talking about the 10-to-1, that's where we will be approaching in steady state. And it will probably take, call it 1 to 4 months after liquidity deployment starts before we sort of move it up to that guardrail. So the second guardrail has to do with a multiplier on the reserve of the base assets that are sidelined. So both the ETH and USDC, as well as the reserves from each of the DAO. And this is kind of linking back to the last question. We bootstrap that by a DAO to DAO, either trade or swap with both sort of treasury inventories, where we get to kind of the ABC token, they get the TOKE. So coming to your point, we won't launch with 500, even if we have enough provided by the liquidity providers. We won't day one be putting 500 million, much less 5 billion out, even though based on the TOKE price, if all of that was staked, it might be that you could go up to that. The second guardrail will kick in, which says, okay, we have these more modest or moderate sized reserves, and there's basically a 3-to-1 at launch when we're going extremely conservatively with these parameters. And Bruno can jump in a second if he has anything to pepper on here. Been working with him on this, but with a 3-to-1, that means that at launch, and based on what we'll have stood up from both the core and then the sort of the reserves of ETH and USDC, it means we'll be around $90 million basically in liquidity that we'll be providing at launch, and then we'll be ratcheting it up to the levels that you're talking about. And really we're thinking about like crawling, then walking, then running. Obviously this thing can be hugely impactful to the space, and really if you think about it, systemically important. There's some really crazy things you can link into this down the road that we haven't even started to drip out there yet. And so you just want to make sure each step, everything's operating as you expect, then you kind of relax the parameters and keep stepping forward. So hopefully that answered the question. But as your point, from the TOKE guardrail factor or leverage factor, even though it's not really leverage, you're right, it would imply this crazy amount, but this other guardrail for the reserve to LP ratio is what will kick in to keep it at a more modest level right away at launch.
Yeah, I guess to kind of follow on that, what are you going to have other staking mechanisms for the TOKE holders who aren't able to get into reactors at launch, or are you going to rely on things like SUSHI's Onsen program and liquidity pools, and how are you going to incentivize your own liquidity, I guess, at launch in order to
Good question. Are you meaning for the TOKE tokens liquidity across the ecosystem, or are you meaning for our liquidity director TOKE stakers incentives? Just want to make sure I answer the right question. There's a different answer for both.
Well, I guess both, but if you look at the participation of the Genesis right now, it looks like about 50% are in the single side staking and 50% are
got it. Okay, I see what you're saying.
Everyone wants to kind of be able to earn on the toke that they've bought, but if you're only able to launch with a guardrailed TVL, which you should have a guardrailed TVL, it makes sense. But what is there?
Okay, I get your question. Yep. Okay. So the nice thing is, even though so that 10-to-1 ratio isn't a fixed, meaning we can actually launch with something much lower. So we're not actually going to prevent those TOKE holders from staking. It won't be like, oh, you didn't get in time. So they'll still be able to come in, and we'll be incentivizing it very nicely, even though we're not using all that 10-to-1, right? Even if it might even be that we're only using, like, instead of 10-to-1, 0.8-to-1, right? If you think about that delta between 5 billion, and I just made up those numbers, those aren't right, but going from 5 billion deployed down to whatever. So everyone will still be able to get in there. It won't be something where we just say, oh, we can only take to this much. We actually on the back end can correct for that with these initial guardrails. The other thing I'll say, this gets a little meta, and don't worry everyone if I lose you on here. Eventually there's going to be a TOKE reactor, meaning there'll be one where users can be liquidity providers on the left side with their TOKE, and then liquidity directors on the right side with their TOKE. So there's going to be a lot of options to use with your TOKE, and there won't be any sort of restrictions, even though we're putting guardrails on the amount of liquidity that actually flows from our protocol out into SushiSwap, Uniswap, Balancer, 0x, etc. We're not going to prevent those TOKE holders from staking and earning. So you won't have to worry about that. People will still be happy, and we're going to keep rewards very enticing for the community. So even going into liquidity direction.
Okay, thank you.
Yeah, thank you.
Thanks, old Greg. I totally forgot about old Greg. That was like a memory from my mind that just like went away. And wow, came flashing back. So anyways, just kind of tailing off of that question, Mish had asked the TOKE Onsen collaboration and what other stuff is planned between Tokemak and Sushi, and maybe we can talk a little bit about what's going on there with the collaboration between Sushi and Tokemak.
Yeah, so it's not just the AMA today, although this is very exciting. We also plan for later today, we'll be turning on a SushiSwap Onsen double rewards, where you'll be able to earn TOKE and Sushi by staking your TOKE ETH Sushi LP with an Onsen. So look for that, I'm sure, from both the Sushi Twitter handles as well as from Tokemak and my own. You'll be seeing that later today once it's live, but that should be pretty interesting. And I should also note, just because we're a unique one, that basically will mean that for Sushi LP providers for TOKE ETH pair, you'll now have two different choices to stake, because you can already stake directly at tokemak.xyz. Those are just for TOKE rewards, and now you have the option to get a blended TOKE and Sushi rewards directly through Onsen.
Epic. All right, so LPs, get at it. You got options. So sweet. And just following up there, what are you most worried about? Biggest risks to Tokemak protocol in your opinion?
Yeah, very good question. Let me think. So I think the truth is we were worried about a lot of things during the architecture of this over the last year, and we've addressed most of those. So I might have to think a second. Bruno or anyone on the team, do you want to jump in with the things, a thing or two that might keep, maybe not keep you up at night, but the things that we're, going to be monitoring closely? I guess for mine, it would mostly just be the monitoring tools. So we have monitoring tools that very simply sort of show the state of the system and which things are in surplus and deficit. And so I really just think having the right visibility at launch, which I feel like we're getting to a good spot, will be there. And then just making sure that we don't deploy too much. Like, we want to, again, crawl, walk, run. So we know what this thing can do, and we just need to make sure that we sequence that correctly, as opposed to just blowing out all of the liquidity day one, day zero, whatever. Let me pause there and see if other people on the team have thoughts.
Yeah, I would agree with that. It was mostly just like really wrapping our heads around kind of the guardrails and why and how, and then also being able to like monitor it and developing the models on our end to know in which scenarios like kind of what our levers are to pull, but feeling confident now with everything we've set up.
I can give what's probably a boring answer and falls into the bucket of most any company building a product. We have a really good sightline on the future, and to get from here to there, we're going to have to take a lot of steps, including as Carson has said, crawling, then walking, then running. I think we just have to be very focused that we're deliberately taking each step at the right time, and if we do that well, we're going to be able to get to this goal that Carson's been describing for most of this call.
I'll say something I think that is important. So Carson has had this vision for quite a while. He tends to be, steps ahead of most other lesser primates, as I've said before. But in each instance that we ran into a technical problem, how do we architect this? Solutions, very, I would say, elegant solutions, sometimes which I can barely understand, have presented themselves. And I think it's indicative of somewhat of I don't want to call it inevitable, but when you're onto something good, something that is sort of in line with the nature of the universe or the nature of the problem you're trying to solve, solutions tend to present themselves, particularly ones that are sort of simple and, like I said, elegant. And I've watched that happen, sort of these aha moments, right when we were like, oh, maybe there's something here that's going to prevent us from doing this, that. We always have found these really nice, simple, sturdy solutions to these problems. And it gives me a lot of confidence that it is going to work, and that everything that Carson was seeing, 6-12 months ago was on the right path.
Yeah, I'll echo that, even though that was a lot of credit, and I appreciate it. Don't know if I deserve it, but I appreciate it. But yeah, I will say that there's something really interesting with this, that the further you dig, the better it gets. It's a really weird thing, because most things are not like that. The more we would start to get into something that would be like, oh, but wait, that makes this part not function like the way we were planning here or something. Then it ended up being that as you pull further on that thread, you realize you unlocked 3 pieces of utility you didn't even know existed. And just as maybe a teaser here for something that will come down the road, and that we've already been talking with some DAOs on that are very excited, in addition to getting their reserves to turn on the reactors, there's also really interesting methods to sort of merge pool 1 and pool 2s for their users by using T asset staking. So every time an LP, some of you are already seeing this, those that have already gone into the pools right now on tokemak.xyz, you get back T assets. That was very, very strategic, so that we could compose on top of what our protocol does, where, great, the assets are in the system, it's providing liquidity across DeFi. Now, what do you do with those T assets, which are always backed 1-to-1 with the base asset? So there's really interesting things you can do down the road. And on top of everything that we've discussed, there's actually a model that in the future can provide, and I'm not exaggerating here, 3 to 10 times the liquidity that anyone, I think on this call, because I think even within our team, thought was possible within DeFi, myself included. And when we realized it, we were like, wow, it's kind of crazy. That will be a while after launch, but there's really interesting things that we're kind of holding up our sleeve for the right time, when the system's already doing its thing, for what this can basically unearth.
Amazing. Thank you. Yeah, this.
Sorry for the background. Was getting a call.
It's all good. Yeah, let's open it up here again to those who have had their hand up. Crocodile playing piano. Let's get you up here. You've had your hand. Yeah, please, everyone, keep your hand up for as long. We're going to try and get to everybody here. So apologize for delays, but yeah, let's. Crocodile, go ahead.
Hello, hello. Good evening, good morning, good afternoon, wherever you are. First of all, congratulations on the incredibly complex project. I've been on the Discord for I think 4 or 5 days now, or actually a week actually, and I've been just reading and reading and reading, trying to get the Eli 5s because of my small brain. But yeah, again, congratulations. My question is around the pricers, which is, I believe, the third big component, the third big actor. Which I believe hasn't been talked about that much. I was wondering if you could go into detail on how the pricers work. How do you decentralize this? How do you actually decentralize the order book? So how do they work? And maybe from another perspective, how would a theoretical Serum Tokemak collab work in this sense? Maybe it would be interesting to hear maybe from the devs as well, some of the challenges involved in making this collaboration. So yeah.
Yeah, absolutely. I'll kick in, and then if any of the devs want to pepper in. Often, the only reason I hog a lot of these things is some of these are going into where we're going, and I'm often the one, I think, like Paul was saying. Well, they all have to do the hard work of actually building things, right, and trying to figure out what the heck we architected. And everyone on this call, by the way, including the ones that aren't talking, are absolute rock stars. I'm in the zone right now doing my job right there in the background, writing amazing code and making sure that what we are building works, and then that the community is engaged. So I get the easy job here often. But the reason I'm jumping in here is looking forward. I'm going to come back to pricers in 1 second because that's a really interesting one too. But sort of looking forward, you mentioned Serum. The end state for this, so even though we're starting on L1 Ethereum, the end goal of this is to be Tokemak will take any tokens on any layer and on any relevant blockchain, and liquidity directors can vote those to any venue on any blockchain and any layer. So ultimately, this thing will not just be tied to the ground on Ethereum L1, and this will be an any-to-any protocol. And again, just thinking about like removing friction and increasing the velocity of capital, basically, or increasing the bandwidth of liquidity. That's the best way to do it. Wherever you have the tokens as a liquidity provider, you should be able to put those into Tokemak. Wherever the liquidity directors want them routed, even if that's moving from an L2 on Ethereum over to Solana or something, they should be able to do that. Now, the reason that can work very well is we operate on what we call cycles. I don't think this has come up on this call yet. Those will be week-long initially, but we will be decreasing those over time. So we can go down to day-long cycles, hour-long cycles, et cetera. And what those are the rebalancing across venues. So as all of the liquidity directors are rebalancing or can change their votes in real time, but once a week we take the new marching orders and we rebalance. So if it was 40% Sushi Swap, 30% Uniswap, 20% balancer, and so on, we would sort of allocate the capital. Then we would reshuffle, because that obviously costs a lot of gas as well. We will rebalance those once a week. Now, this links back into the pricers. Pricers are where you need real-time participants, meaning those that interact with the market in real time. So in the case of Uniswap, Sushi Swap, Balancer, the venue itself is sort of the real-time pricer participant. Obviously, that's the beauty of AMMs. They're on this curve. Nothing you really need to do until we go into V3, which, by the way, very interesting things that we can link into via financial Legos going into Uniswap, V3, Trident, et cetera, things like that. But coming back to the pricers, the only one we need at launch is for 0x. So you need someone to basically put the bids and the offers in, or in the case of RFQ, respond to RFQ. So at launch, we're actually going to be using Fractal, the market making firm, trading firm that I had, but Fractal is going to make nothing from that. They're basically doing it 100% as a service. And when I mean nothing, I mean nothing. There's no backdoor where we're doing anything like tricky or anything. The spread, the fees, in the case of Sushi Swap, the sushi that we would earn from staking, all of that is going into the protocol, and 100% of that is then owned by Tokemak and earned by the TOKE holders. That obviously is the only fair way to do that when at first that piece wasn't decentralized, and we needed the tight feedback loop to make sure that everything was working correctly. So additionally, those funds are not taken custody by Fractal. We're using, I think it's called Wallet. Correct me if I'm wrong. Cody, I think you'd probably be the one that knows the most on that particular thing. Is that the function call that we're going to be using?
Yep, we're going to have kind of our own trade wallet that the Fractal would have access to.
Yep. So basically we have, instead of having it go like sent over to a third-party market maker, that part is still decentralized. It's going into an address, and Fractal is just able to use what's called I think it's the wallet function in 0x V4 or whatever they're on right now, which then enables them to put pricing on behalf of those assets. So it's still non-custodial in that that sense. And then what we're going to do going forward, because that's obviously we started by decentralizing liquidity providers and liquidity directors, the pricers will be the next thing we decentralize. And the way that will work is we're basically going to have the different market makers and trading firms, many of which we've already engaged with, and they know sort of what's coming, to be able to plug into this. They'll have to basically stake a certain amount, sort of to a node, a certain amount of our assets, so that they then have skin in the game, because they need to be able to be slashed in the event that they're acting as quote unquote a bad market maker. And we of course have to delineate what constitutes being a bad market maker, write those rules out with the help of the other market makers, and then we'll turn that on decentralized, where there will be some level of rewards in the future when we're ready, where there's no special treatment to any single market maker. So that's kind of the flow and how this will progress. And then in the future, that will be a decentralized approach too. Importantly, this does not have to be limited to current market-making institutions. I believe that in meritocracies, and anyone that has TOKE should be able to plug in as a liquidity director. Anyone that has tokens, other tokens, should be able to plug in as a liquidity provider. Anyone who's a rock star at putting bids and offers into the market and having a tight spread and basically be able to play the game of a market maker should be able to plug into us as a pricer. So likely the way we will have this is a certain sort of test that they need to do, run something for a day, a week, whatever, to show that they're able to do it. And there'll even be ways for those that might be great at that and might be a gigabrain whiz kid but don't have access to capital, where someone can still stake to them so that they can be a powerful pricer in our network and not have to just come from a firm that has $2 billion in it or something like that.
Awesome. Thank you so much for the answer. And I guess just one more thing, since we're walking towards singularity. Do not go gentle into that good night. Rage. Rage against the dying of the light. Thank you so much.
Love it. Thank you very much.
Thank you. Thank you, Crocodile. Appreciate that. And just kind of spinning back here towards like hearing you speak about layer 2s and other chains and other places. So you're saying there's a chance for Cardano then?
There's always a chance for anything. Basically, if the community of TOKE holders want a new chain, I think that this is something where, just like I was saying a minute ago, I think wherever possible, other than in this kind of first bootstrapping phase where there's certain decisions we had to sort of make in order to move fast and get this, move fast and move efficiently to get this out. We want to put this up to vote. So I think that could be something that either we'd be hearing from the community or even could put to almost to vote for sort of where are the next best opportunities, whatever other chain that is.
So you're saying there's a chance. Anyways, Crypto Prowess, you're up next. Come on here. Thank you. Go ahead, Crypto Prowess.
Thank you so much. Thanks to the team for all the insight that you guys have given over the past few months to be able to understand this very high level project that you're bringing to the community. My question is not really around liquidity. It's more around NFTs. Do you guys plan to launch like a Genesis NFT for people that participated? And I guess second, is there a plan to maybe make NFTs somewhat like a version 3 SUSHI, to where liquidity providers can issue an NFT so they can lock up liquidity for a certain amount of time, so they can be aware rather than liquidity moving so fast and things like that, but they can more or less have a structure of liquidity that they can then allocate rather than, it being removed so quickly in a reactor or something like that. That could also yeah, please.
No, sorry, keep going. I didn't mean to cut you off.
No, and I was just, wondering, and, I'd also like to have a Tokemak avatar, so I didn't know if you guys planned on releasing like a Genesis NFT or anything like that.
Yeah, we love that. I think for the first question, I'm going to throw that over to Paul as our resident design guy here, and then I'll take the second question about kind of the locking up and NFT of liquidity.
Yeah, we've heard you guys, and we are also NFT fans. Some people who think they're better than others on our team have punks. Other people have off-the-shelf JPEGs.
Hey, chill.
Gorillas. But yeah, we heard you on the NFTs. We really do want to do that. It's something that we've always sort of wanted an excuse to do. And now that you guys have given us that, we're already actively engaging people that will be able to help us launch not just an NFT, but something that's actually cool and people will want to own. So we're on it.
Something maybe on like an Arweave or something as well. Like, decentralized, like on-chain NFTs, perhaps?
Yep. Yeah, we're gonna try to do something maybe not innovative, but definitely like current and interesting.
And I'll hit a couple things for the second one. First thing I'll say is if Aave has Avagachi, we could have Tokemon. Just saying. But I think for the concept of kind of blocking liquidity, whether that's using NFT or just some sort of a time lock or something, that's definitely something in the early days we explored in some level of detail, and I think we could still bring it back. But as all of you who are in the audience, especially if this is your first exposure to Tokemak, which if it is for any of you, thank you for dealing with this. It takes enough exposure. You have to see it a few times before you understand. So don't be intimidated. Read stuff on Medium. Take a look at some of the tweet posts, including the Sterling Archer or S Archer one out there, which is a great tweet storm. But anyways, we decided not to do something initially with sort of vote locking, just because we didn't want to add a whole additional sort of layer of complexity to this already admittedly complex but powerful machine. But I do think that's something that we can revisit in the future, kind of once we get to kind of steady state. Is do we want to have something with sort of locked liquidity, where then you can get some sort of a directing or APR multiple or scaling factor of some sort. So definitely something we're thinking about, and of course any way where you can integrate that with NFTs in an innovative fashion is really cool, because as Paul said, we're NFT fans. I'm also closely watching what's happening with gaming, and I think the intersection of gaming, DeFi, and NFTs are going to be incredibly powerful. And I think of Tokemak as sort of a base layer that can eventually integrate into a lot of these things, even if people don't know it down the road.
Perfect. Thank you guys so much.
All right, thank you, Crypto Pros. Okay, we're at an hour and a quarter here right now, so I just want to point that out. But we'll try and get through some of these questions here. Maybe we'll bring up people that haven't had a chance to speak yet. So Andres HM, and also just for the Tokemak team, if you don't mind, just going through any of the AMA text questions and anything that we haven't really covered yet, if you want us to touch on or deal with. I know we've kind of been all over the place here with things, but we have covered quite a bit from the text questions and some of the stuff that's been asked. But if you guys have anything, just interject in between questions as I bring people up, and we can try and answer those. So anyhow, Andre Sham, however it is, go ahead.
Hey.
Go ahead.
Thanks for the call, guys. Appreciate it. This has been super informative, and the Discord has been really helpful. Quick question. Could you just comment on the circulating supply and the inflation schedule for the total supply? I think sort of at first glance, it's a little shocking. Obviously, when you're looking at that fully diluted valuation number, I'm sure there's much more to that, but if hearing the rationale from you guys, I think could be helpful for a few of us. Thank you very much.
Yeah, I can jump in on that. So we have a strong amount that is basically kept within the DAO, as well as a bunch that investing is going to have both a long vest and also is not going to, like currently is not diluting people in those other pools. So kind of the rationale was this gives us firepower if we keep as much as possible sort of in the DAO, because of this interesting interaction where you have a reserve on the backstop versus the liquidity that is out deployed by the liquidity providers. And the other thing is, for example, the kind of core bucket, the tokens in addition to the degenesis that go to core, some of those things, these were basically to make sure that we have a significant sideline amount in order to bootstrap some of those smaller projects, where we can basically do a swap or a trade in order to get them allow them to be powerful liquidity directors day one, or meaning day one when they launch liquidity, not necessarily our day one. And then additionally, we can have basically the assets we need for a reserve. So we think of that as kind of optionality into the future. And for transparency, it's going to be a long time, if ever, that we actually ever emit all of them. So even though 100 million is the sort of hard cap, there's a good chance that we will never have to get anywhere close to that cap.
Got it. Thanks, guys. Appreciate it.
Yeah, of course. Thank you.
Cool. Thank you. We'll bring up Papa Harry. Sorry, Huevos, you've been up already, but I do appreciate the participation. Go ahead, Papa Harry.
Thank you for the opportunity to ask a question. So building on the last gentleman's question on the tokenomics, do you suspect, at least in the short term, that our kind of gains will really just come from the yield that we're getting rather than the appreciation in the token price, for the short term? Or how do you kind of envision the growth of the value of the TOKE asset itself versus, just the rewards we'll be getting by becoming liquidity providers and basically, putting up into these different reactors? That was my question.
Yeah, great question. So I should preface this by saying this is all the usual. This is not investment advice. I don't have a crystal ball, all that fun stuff. But having said that, I think what I can talk about is sort of the fundamental value of a TOKE and how it should evolve. So the reason we are emitting early days, and as you were saying, there's going to be attractive just in terms of quantity perspective, right? If you're interacting with the system as an advanced user who is either liquidity directing or liquidity providing, you could earn more TOKE and become more powerful that way. That's great. Now the other side of that is great. That also means that with emissions, you don't want this to sort of impact price. The reason why I think that this thing will actually accrue more value even while we emit is because it hands out assets. We haven't gotten into this on this call, but there's actually when we get into liquidity direction, the thing only emits a maximum amount on a given week. There's sort of a maximum amount if everything is at perfect peak efficiency. So liquidity directors and liquidity providers have to be balanced on each reactor. This is the game of balance the reactor that's going to make a lot more sense when we publish the article basically on this mechanic in detail. But anytime something is sort of off balance, it means it's actually emitting less. So as this thing is providing more value, pushing out more liquidity and pulling in more value into its reserve, it's emitting more. So it's actually providing more, it's pulling in more value and becoming a more valuable token at the same time that it's emitting more. So there's this nice sort of balance. The other thing is right now DeFi, and I know we've got almost 300 people on this call, so there's definitely people that know what's coming, but DeFi and the broader ecosystem right now has no idea what's coming. This is still very under the radar. I think our pilots and our Mavericks and our all of the Tokemaks are second to none. Our community is amazing right now, but we really did this sort of grassroots up in terms of how the launch went. We purposely have not been shouting this from a mountain. The moment that people are going to understand what this does is when they actually see liquidity being deployed from this sort of monster protocol where all of you as the TOKE holders, as the liquidity directors, are the ones making the decisions and routing the entire TVL of the protocol out into the markets. Once they understand that, the liquidity arms race will be on and people will be playing catch up. So I won't speculate on openly speculate about what that means for price, but I think you can get sort of the implications of that from thinking through what that means and thinking about who understands what this does at the moment versus who will understand later. And by that point too, it's actually proven because it's doing what it's meant to do.
Thank you for that. Yeah, it might be really excellent timing if we kind of continue this more macro bull run into the early 2022 as well. It'll be interesting to participate. Thanks, guys.
Yeah, of course. Thank you. And not just for Tokemak's sake, I hope that continues. And I certainly am bullish so about the broader ecosystem.
Thank you, Papa Harry. Okay. So I see Jake's been fielding a bunch of AMA text questions in there. I hope that's answering that. We've got two more hands up from SAR and Huevos. I know they've been up here already. We'll probably cap it on questions from the audience at that point, as we are now running into almost an hour and a half. So I do want to start wrapping this up here, but I'll get you guys both up here, and then that'll be it for requests. So I don't know, I think who was up first, Huevos or SAR? Whoever was up first to go ahead, and then we can go from there.
Yeah, I can take the stage if Huevos doesn't mind.
Sure.
So my question is now more of a bit of a practical question. I'm enjoying hearing a lot of these mechanisms and the way they're developed, everything. I think you guys are very knowledgeable about what you're building. But I want to know if you're planning on maybe building a high-level formal model of the system that can be a little bit more scrutinized. And from the implementation side of things, will you guys do what kind of audits, security, smart contract audits, do you plan on doing? Hello?
Sorry, I was on mute there. So for the first one, I think for getting a model out broader, I think that as long as we can make it digestible, I think that's a great idea. We have some internal ones that we've been using. I think we just have to figure out how to make them sort of community digestible, and then we'd be more than happy to, I think, share some of those. In terms of the audits, I believe there's now 3 different firms that we've either already had audits from or are sort of past the interim one and now going into their final. Cody, Craig, Sam, Jake, any of you guys want to comment on which ones, which different groups we've been engaged with?
Yes. So we're definitely on our 3rd audit right now. We started off with Trail of Bits, doing a kind of high-level overview a few months ago, probably 3 or 4 months back now. And then we engaged with Omnitia right before the Genesis event to make sure that one was all well and good. And then we are finalizing our kind of full system audit with QuantStamp just right now. And
one thing to pepper into is Trail of Bits. We'll have basically then the full system level from both QuantStamp and Trail of Bits. We already had the initial overview one, I guess, of Trail of Bits, and then there's one more coming. So we'll of course be making all of these public as well. So, but that gives you an idea for the 3 different groups that we've had on that.
Okay, perfect. Thanks, guys.
Yeah, and I like the suggestion of figuring out some shareable models so that people can kind of play around with it themselves too. I'm sure we can get to that in the not too distant future here as well.
I don't know if you heard about CAD or some of these high-level formalisms, but your system seems very complex, and it would be very enjoyable to see one of these formalisms pop up.
Yeah, absolutely. Agreed.
All right, thank you very much, Sar. I see Huevos has gone back. Yeah, a lot of questions have been answered here today, and yeah, I don't know if there's if we want to just go through the AMA text questions here quickly, if there's anything outstanding there that we want to look at. I've kind of been losing track a little bit here. There's been a lot coming in. So Jake's been fielding a few things. I hope that that's answered on the way there. We've got when slashing Tokemak itself depend on liquidity to be able to convert TOKE into the tokens needed to convert deficits. In a case of a large slashing to cover deficits, how will the token conversion to be handled to minimize slippage?
That's a very good question, and one of those rare ones where kind of as Paul was talking about in the past, when we saw things and we felt like, oh, well, this part isn't super ideal, and then we found a really elegant, interesting solution. We actually have a model where there is never any market sell or market buy pressure that the protocol hits across the board for any tokens. And this again is in the article that we're pushing to get out here. But basically, when the TOKE slashing actually does not sell the TOKE, and that's very important because otherwise, of course, there's this question of, okay, is that sell pressure on this, and all of a sudden you can get occasional blips in this. This has to do with how we use the reserve. So the short answer, and this will probably only get people like 1 foot over the threshold in understanding until we get the article out there. But effectively, so for example, if you're talking about the SNX reactor and SNX ETH price goes up, which means you're selling SNX. So we have 100 TSNX outstanding, and now there's only 90 SNX in the system, so it's underwater. That's actually not an issue until enough LPs withdraw to get into that margin where you're underwater. What happens at that point is we have the sideline reserve, which is not deployed as liquidity, and the reserve, since it's sitting in SNX, we basically pull out from there to hand it to the SNX holders or LPs that are withdrawing to always make them whole. So we always ensure that the liquidity providers are one-to-one made whole. There is no IL for those particular participants. It's mitigated and transferred elsewhere in the system. And then the way the rest handles is there's other system surpluses in our end-to-end assets, end-to-end pools that are then pulled in back to the reserve, not to the LPs, but to the reserve to make the reserve whole in value. So you're pulling in the surpluses, and then if and only if those system surpluses don't cover it, then there's a localized TOKE slashing, and that just means that the liquidity directors specifically to that reactor, so in this case to the SNX ones that were earning rewards, backdropping or collateralizing that SNX reactor, and we're getting the benefit of being able to route the SNX out across the different venues or exchanges. there would then be a slashing on that. And these will actually be quite rare, actually, and we've done a lot of modeling on this. But that would just be used then to cover the reserve. And it wouldn't be like a total loss for them. We never do globalized losses for TOKE holders. It's always localized to a specific reactor. And it's always pro rata amongst the people that are within that pool rather than taking completely from someone. So I probably lost most of you. If I was in the audience, I think I wouldn't have been able to follow that when I don't look at this and think about this every day. But we'll have articles that are becoming that will explain all of this. But that's sort of the answer to that question.
All right, wicked. Yeah, a lot of big brain stuff going on here. This is awesome, though. This is really awesome. Yeah, with okay. I don't know. I think we've kind of covered most of the AMA text questions in there. We're at an hour and a half. I think this is a great place to wrap up. We've covered a ton here. I mean, yeah, this is like one of the longest AMAs we've done. The last one that I remember being like an hour and a half was Alluvium. And yeah, Alluvium's been doing...
Great project.
Yeah, Alluvium's been, seems to be doing quite well. So...
Maybe we could end on everybody going to Tokemak.radio and having a good time.
Yeah.
That's true. Tokemak.radio has some great anime and tunes for those that want to get in the vibe of the Tokemak. So
cool. Well, yeah, that's
it's a
great.
Legendary mix for sure.
Nice. So Tokemak.radio. That's one place to find you guys. And find out the vibe of you guys, I guess. And for your website, tokemak.xyz, so TOKEMAK.xyz, and that's and your Twitter handle is @tokenreactor. And I don't know if you guys we can post if you guys want to put your Twitter handles into the AMA text questions, feel free, but they can find you all kind of from @tokenreactor, I hope, or find you guys that way.
Sounds good.
Cool.
Thanks for everybody for attending.
Yeah, absolutely.
Yeah, thanks so much.
Yeah.
Really appreciate it, community. Appreciate it, Tangle. Appreciate the invite from Sushi here.
Absolutely. And they can find and connect with your Twitter and Discord and everything through your website. And yeah, that way get connected with you guys in your community. So that's great. And then anybody that has been in the room here for, I don't know, it seems to be going really slow here with the logging, but we're almost caught up. But yeah, if you've been in the room for probably 15 or 20 minutes now, you should be logged to get a POAP for this event. So after the call, I'll open up the Get POAP channel in the Sushi, in the Sushi bar, Sushi bar, you'll see Get POAP, and in there you can just type !claim, and you can claim your POAP for this event and any of the previous 5 events that you've been a part of. So no rush to get in there. It's good for 30 days. You don't need to ape into this. It's going to be there waiting for you. We don't want to break the bot, so go gently, please and thank you. This has also been recorded and will be up on YouTube. Should have that up in the next couple of hours, so keep an eye out for that. And yeah, with any of these events, you can follow me on Twitter @0xtangle, and you can also go to our newly created calendar channel, which is just underneath announcements in SushiSwap, and you can set that. We've got Sesh involved with that, so it can keep track of your events for you, and we'll have a listing there for the events that are happening with SushiSwap, and you can just click on the little click on the green check mark, and then it sends you a DM. Click on the alarm clock, gives you a timer for when you want a notification ahead of time. So that way it keeps you involved and keeps you reminded that you can be part of the next events here. So anyway, thank you all so much. Appreciate everyone coming out. Thank you, Tokemak team, and a lot of really cool stuff to look forward to. So thank you guys so much.
Thanks, Tangle. Appreciate it, man.
Thanks, Tangle.
Alrighty.
Thanks, everyone.
See you, everybody.
All right. Peace.
All the Discord.
Bye.
Thank you.